we'll be talking about DSP Smallcap Fund, and for that we have Resham Jain, Fund Manager and Vice President Equities, DSP Mutual Fund. Resham, hi, good evening and welcome to the show. Before we deep dive into your fund and the kind of strategy you've been opting for and the kind of green shoots and trajectory of small cap as a sector you are trying to observe, we just want to go back and analyze the kind of returns that we saw last 3 years. Overall Nifty small cap, if we talk about 67 to 70% return. In last 1 year, we've seen somewhere around 24-25%. Should we expect the same kind of trajectory even in this year as far as small caps is concerned, or it's time to taper down your expectation as far as when it comes to exposure in small cap and your return expectation is concerned?
So thank you first of all for inviting me. I think for sure last 1 year, 3 year, 5 year, if you take any period, small cap has given returns much higher than anyone's expectations, and hence expecting the same return over the next, let's say, 1 year would not be wise, and hence I feel there will be a consolidation. The other factor which corroborates with this fact is the valuation. So if one looks at the average valuation over any given period, the index and per se the overall portfolios also are little expensive, maybe 10-15% compared to where the comfort zone would be. So expecting very high returns in near term would not be a correct thing.
All right, so it's time to taper down your expectation as far as return is concerned, and overall, even if you talk about your strategy across market caps, it's the time where you should maybe reshuffle and reallocate your exposure across market caps. But then when we talk about small cap, one needs to have a strategy, one needs to have a financial goal lined up to it. Resham, we are also looking at Q3 results now. Talking about this specific space, what are the red flags in terms of sectors, in terms of companies, and in terms of valuations also, which is a concern for you, looking at Q3 results coming up now?
So in general, I think the last 2 quarters, if you look at, there has been some moderation in general, right from GDP growth to the capex spend to GST collection. If you look at most of the data points, they are showing some level of moderation, and which is reflecting in the company's performance also. So we have seen compared to last year, the growth numbers have been coming down in single digit. At the same time, there are sectors which are seeing a much higher level of impact. So, for example, consumer discretionary, for example, is one where we have seen some level of slowdown. And the export-led sectors, for example, because of what is happening globally, specifically in some of the European region, plus the way Chinese companies are dumping in many industries, we have seen some slowdown. So it is very stock specific and company specific, but in general, I think consumer discretionary and to some level manufacturing/industrials have seen some level of moderation.
What is the current exposure of your fund, Resham? It's an active fund. What's the kind of exposure in terms of sectors that you've lined up or designed for your portfolio?
So broadly, I can bucket the whole portfolio into 4 important buckets. The first one being consumption. And I want to just clarify, when we say consumption, typically we talk about FMCG companies. But when I talk about consumption, these are like very niche spaces within the small cap space. And some of these companies are only available in, for example, small market capitalization. And all these consumption themes are related to, let's say, increasing per capita income or higher convenience factor, which consumers are required or are seeking for, or the way unorganized to organized themes are playing out. And I can give you examples. So, for example, we have a lot of companies in the home improvement space. Last 3 years, we have seen the real estate space has done well, but home improvement is one space, whether it is related to your dining table, or whether it is related to building material or related to consumer durables. So there are multiple spaces there. Then we have within
But then the
consumption.
pace has been really, but the pace has been really slow as far as urban is concerned. I mean, rural we are still seeing a pickup, but then it's not where it should be actually as per expectation. But urban has slowed down in one way when it comes to demand and when it comes to the entire consumption story, not only FMCG, that too. So, what is your take on that? Don't you think that's going to be a concern in coming quarters for the companies as well?
Yeah, in general, that is definitely a concern. We have seen the some slowdown in the urban consumption, but then when we talk about small cap per se and companies per se, we need to see how companies are approaching. So, for example, we have companies in, let's say, travel segment or in a home improvement segment where they have a higher exposure towards, let's say, online. They have positioned very well on the online side. The channel of consumption is shifting from the typical general trade to online and quick commerce. So companies which are rightly positioned into those space, I think that is a way one can try and mitigate some of this current
Seasonal
consumption
trend
related
also.
challenges.
Risham, don't you think that's also a very seasonal trend that we will see? I mean, yes, people have gone online, etc. But then, the second half of the calendar year sees more action in these particular spaces. I mean, otherwise, you see, it's a lull period, at least from Jan to June, that we usually experience.
Yeah, that is correct. And this is definitely to do with the general kind of slowdown. And but on the other side, there is another trend which is kind of picking up quite well, is the way a lot of state governments are giving freebies and stuff like that. Some of the small ticket discretionary items could see some level of revival after, let's say, 1 or 2 years of moderation in their performance.
What about your other three themes where you have bucketed the entire portfolio, Risham?
So other than consumption, the other big theme which we are playing is infra slash capital goods slash environment. And there are multiple space. So for example, power, water, roads, digitalization, we require a lot of cloud storage, data centers. So some of these themes is where we are playing, and we are playing through, let's say, in power, through cable companies, through transformer companies, through companies which are into substations. So there are multiple verticals within that. Or for example, to play the environment theme, we have seen the way ethanol penetration has increased in India. So we have companies within that space. So this whole infra slash capital goods slash environment bucket is almost like 20% of our portfolio.
Uh, how much cash are you sitting on?
We usually, if you look at long term also, we have close to 4 to 6% of cash in our portfolio. We never take cash calls. We always worry top down, but we invest bottom up. That is the approach which we have adopted over a period of time.
Sure. Any specific exposure to micro caps in your portfolio?
Actually, there is no specific definition of microcap, but if one has to
Right.
say that more than 500, or let's say companies having, in terms of ranks of market capitalization, more than 500, I think we have more than 37, 38% weight in that, which is highest in the small cap category, if you look at all the peers put together.
Sure. And the same sectors that you just mentioned earlier?
Sorry, I couldn't get it.
The sectors are the same that you mentioned earlier?
Yeah, yeah. So a lot of sectors are very similar within
Okay.
the micro categories as well.
Okay. Now looking at the Q3 results and also budget being very important trigger, this time it's going to be a full budget, and we are not only expecting a lot of reforms announcement, but also for the capital markets a lot of relief. When we talk about small cap as a category, mid cap and small caps are two very important ingredients when we talk about development of an emerging economy. They play a very essential role. In order to develop these particular sectors, what are the steps from the government that you might want, as an announcement, or you might just expect?
I think when we speak to a lot of companies, the usual kind of feedback is relaxing a lot of compliance related issues. Obviously, over a period of time, we have seen some of that getting relaxed, but still a lot of relaxation on compliance side to put up a factory. For example, in India versus some of the other emerging countries, that time has to come down. Second, other important reform I think is still pending is on labor side, and which is a very sensitive topic as well. But I think if India has to grow, then the employment generation has to happen at a very significant pace. And some of the opportunities are coming our way. We have seen, let's say, in chemicals, the way country has grown over the last decade or so. We have similar opportunity in a lot of other space, electronics being one, where we have seen a lot of improvement in the last 5, 6 years, thanks to the PLI scheme which government has launched. I think similarly on textiles, we have a very large opportunity. India is just $30 billion of exports of garments, while some of these smaller countries than us are way higher than us. And some of those geographies are either in a way capped in terms of how much more they can do, but because of geopolitical reasons, there are opportunities our way. So labor is another important aspect which one need to see reforms on. And lastly, I think power, because if Indian companies need to grow, I think our energy cost has to be competitive and should be available. And that is where a lot of reforms are happening. We have seen a lot of changes in that space, specifically on the renewable side. More has to come in. So I think if I have to summarize three important wish list, I think these are the three important things on the reform side.
Coming back to your fund, the DSP Smallcap Fund, Resham, what's your churning ratio?
It's close to 18 to 20%, which means that on
Sure.
an average, we hold a company for close to 5 years.
And in terms of strategy, would you say it is more of a growth-oriented portfolio, which is also suitable as far as the small cap sector is concerned?
Yeah, so that is one of our key principles, that we want to invest in
Sure.
companies which wants to grow faster than the GDP growth. So in terms of nominal GDP growth, so more than 13%. So definitely it is growth oriented portfolio.
Last question, and this is an ongoing debate, that we're also seeing on social media and everywhere else, because investors are interested in a small cap category, but then the route that they should be opting for: an active small cap fund or a passive small cap fund.
I think good quality companies, whether it is an index or whether it is active fund, need to be adopted. And hence, for example, DSP also, when they thought about launching a passive small cap fund, they have launched and adopted a quality small cap fund, because it's very important to find the right set of companies. Because there are only, if one looks at the statistics over the last 10 years, there are more number of companies which has kind of given much inferior return in terms of just sheer number of companies, and hence it is very important to select the right set of companies.
All right, Resham, that will be all. Thank you so much for joining in and helping our viewers understand your strategies for the small cap DSP Small Cap Fund. Thank you so much.
Thank you.
And time for a short break, but then post that I'll be joined by Pankaj Matpal, who will be looking into your financial portfolio and will be doing your live financial planning. So just in case you have any question related to your financial portfolio, any mutual fund choices, or anything that you want us to strategize, any financial goal, you can send across your questions on our WhatsApp number. And you can also email us your questions on themoneyshow@etnow.tv. See you after this break.